Good afternoon. Welcome to Mid-Cap Radar. I'm Sonal Bhutra. With me is Vivek Iyer. It's up and away on the Nifty today. Of course, it's the crucial monthly expiry as well. And we've seen a stellar rally in this series already, the third consecutive month where we'll see the month ending on a positive note. The mid-caps have come in some for profit booking, but it looks like a decent set on the benchmarks overall.
Absolutely right. Good afternoon to you too. And it's the broader end of the markets that are seeing a bit of a decline. In the last few trading sessions, despite the fact that the benchmark indices are higher, you're actually seeing market breadth quite negative, and that's been a bit of an issue as far as the portfolios are concerned. But quite a lot lined up on the show. Let's start off with the top headlines. Heavyweights continue their gradual climb, but mid-caps come under pressure again. Consumer durables and utilities are the big drags, even as IT, metals and auto eke out gains.
Samvardhan, Motherson and Sona BLW gain in trade on the back of a bullish note from BofA Securities. The brokerage says these companies offer solid structural earnings growth story and anticipate a significant export tailwind.
Crompton corrects post its analyst meet. The stock is down over 5%, even as brokerages MS and Nomura issue equal weight and buy calls, respectively.
Okay, 26,100. That's the mark that we are at right now on the Nifty. The big question was whether we would sustain above the 26,000 mark. We can say yes, that's the comfortable level that we have crossed for now. But of course, it will be important to see whether we sustain it at those levels at the high point of the day right now. The Sensex is up 300 points. We have the Bank Nifty, which is underperforming but still in the green, and a lot of sectoral movers. The metal index has come back again. It's up around 1.5%. We have the autos, which are contributing as well, and the IT space. So these are some heavyweights which are contributing to the gains that we are seeing. The realty space has come in for some profit booking. CPSE as well, seeing some cuts today. But the stocks that really contribute to the Nifty gains are contributing today, and that is exactly what we are seeing in the market moves as well. Mid-caps, though, we'll talk about those names in greater detail with Hormaz as well. But for today, mid-caps and small caps seeing a fall again.
Right. Once again, breadth is negative, despite the fact that the benchmark indices are holding up. In the last half hour or so, you've seen a bit of a bounce as far as the OMCs are concerned. So names like HPCL, BPCL, ICL, seeing a bit or tinge of green. But this is a special segment, mid-cap movers. Hormaz is standing at the wall to take us to the mid-caps that are moving around in the session.
Pressure continuing in the broader markets, even as the Nifty is continuing to make new highs. So we'll start out with those stocks that are at the losing end of the spectrum this afternoon from the broader market space. PB Fintech is one of them on the back of that news flow. 6.5% lower. Crompton now has fallen to the lowest point of the day. Another 6.5% there as well. Kalyan Jewellers continues to see some profit booking. 4.5% down here, down to the lowest point here as well. As is First Source Solutions, a recent high flyer over the last month and a half, and that too is down 4% in today's session. Plenty of brokerages. Commentary came out this morning and stocks are reacting to that. On the one side, there is Samvardhana Motherson that is up 2.5% at the highest point of the day. But on the flip side, Bharat Forge, after the downgrade, is down 3.5% down to the lowest point of the day. And Trent, after that initiation from Citi, continues to grow from one high to another. Metals are continuing to do well on the hopes of further stimulus coming from China. And Vedanta, after the dividend announcement as well, fourth interim dividend coming pretty soon. 500 rupees now on the stock. SAIL and Nalco too having a good day within the metals pack. Stocks that are doing well on the back of volumes, and Prism Johnson features in the list yet again. Another 9% on the stock today. Elcon Engineering and Blue Star also seeing healthy gains on very strong volumes. And lastly, some stocks within the broader markets that are on the gaining end of things other than the ones we just spoke about. Easy Trip Planners, after the promoter selling stake, they made some announcements today as well. Swan Energy and Sapphire Foods also in the green in today's session. Back to you guys.
Okay, some of these names which are bucking the trend. Thank you so much, Hormaz, for joining in as always and letting us know what the big movers in the broader markets are. We'll do one thing, we'll slip into a short break. Up next, we'll connect with Harish Abhichandani, the CFO at Ola Electric. The company has announced launch of its network partner program. We'll talk about this and a lot more. Stay tuned for that.
Welcome back to Midcap Radar. Let's now put the focus on Ola Electric. The company has announced the launch of its Network Partner Program. This program is aimed at taking the EV revolution further into Tier 2 and Tier 3 cities. To discuss this, as well as concerns that users have raised regarding service center operations, we have Harish Abhichandani, the CFO at Ola Electric, with us. Good afternoon, Harish. First of all, thank you so much for joining us. First up, talk to us about the Network Partner Program that you've just announced. How does it help your internal targets to achieve further sales, and how do you see it help EV penetration into Tier 2, Tier 3 cities?
Good afternoon, Vivek, and thanks for having me on the show. I think our unique, front-end strategy continues to, grow and expand, significantly. We have always had a very unique front-end strategy direct to the customer channel, and this is just taking it to the next level, very deep penetration across the ecosystem. So this is how we have kind of further enhanced that strength in our strategic roadmap.
Okay. So, Mr. Abhichandani, this is the front end of the business that you're taking care of. I just wanted to come back. There's a brokerage note coming in today from HSBC, which talks about how they visited multiple Ola service stations, and most of them were overwhelmed by service requests. So, while you're taking care of the front end, what happens at the back end? How are you planning to sort that issue? Because there have been a lot of service request issues that the customers have been facing.
No, Sonal, I think the point is on the service, we'll continue to invest. We are continuing to expand our service centers. We have a little under 600 currently, and they are getting ramped up as we speak. And the same HSBC note also talks about how we are doing the right strategy on execution on service centers. So that investment in service centers is, very strong investment parameter for us. We are, that paramount interest from a customer perspective. So that's very much on the roadmap, and it's executing as we speak.
Harish, we take that point on board. What we want to understand is what is the kind of investment, number one, you're putting in service staff, number two, in spare parts, and also in expanding your space. Also, the same note also mentions that 6% of your total revenues was actually a warranty cost. Now, FY25, FY26, FY27, how do you see that particular component play out as part of your total sales?
So 2 points you made, Vivek. One is on warranty cost, and the other is how are you looking to invest in multiple segments of our service ecosystem. So see, if you look at historically how our warranty costs have always improved quarter on quarter as we have moved from Gen 1 to the Gen 2 platform. And that is behind us. The second is, as obviously I cannot share forward-looking numbers for FY25, 26, and 27, but it's the best-in-class benchmark from our investment perspective. And of course, we use a lot of technology in our service ecosystem because our scooters are extremely high on tech. A lot of the issues around software, etc., are handled remotely from our tech network centers.
Okay, so now that you're looking at expanding this network, right, in Tier 2, Tier 3 cities so that EVs see more penetration going on there, will you have to increase the investments that you'll see on service centers, Mr. Abhichandani? And the second part of the question is you do have a lot of launches coming up. It is one of the highest that we have in the two-wheeler industry as well. 14 lined up for you versus peers like Honda, they have 6, Bajaj has 6, Hero has 14. So in that case, do you think you need to fix the service issue first before seeing more launches in different segments?
So the point on products, our focus on the end ICE age part of our strategy is very, very strong. And in that direction, we have kind of led the scooter, the EV space in the scooter segment. We will drive the leadership again in the motorcycle segment. You have seen, and you rightly pointed out, there are a slew of launches coming up across the motorcycle ecosystem. And that will continue. On the service, for us, it's a continuous process. We are ramping up service, as I said. There will be investment in that space across the country. We have right now almost 800 of our own stores. We are launching up with this new partner network. 625 partners have already signed up. They'll ramp up to around 1,000 by the festival season and up to 10,000 by next year. And many of these will also have co-located service centers across. So we are significantly ramping up our service network across the nation.
What kind of investments will you have to make, Mr. Abhichandani, on this and the network expansion that you're looking at? Any number that is, please go ahead.
Yeah, no, sorry. See, the way we have functioned both across the front end and you see our D2C model and even the network partner expansion, which we've announced today, they are very efficient on CapEx. And a lot of our service centers, we follow a very different model on a hub and spoke across the cities. We have a very strong kind of tech backup to enable a lot of this service remotely. So our investments are absolutely efficient. Honestly, I won't be able to share any CapEx numbers on this call, but it's extremely efficient, but expanding very rapidly.
Mr. Harish, the other thing that a couple of analysts have pointed out is while you have the strongest pipeline as far as the electric two-wheeler market is concerned, even the incumbents have actually launched quite a few launches and they have come in at more attractive price points. In fact, the note also mentions that your market share has actually declined to 27% from 31% that was in August. We're talking about the month of September. So are you a little worried about market share erosion that you're seeing on the back of incumbents also, upping their game in the electric space?
See, we welcome the expansion of the EV ecosystem, and our thought on the end ICE aspect has always been consistent throughout our journey. Incumbents coming in with EV launches, it only expands the EV ecosystem, it creates more customer awareness, etc. And as far as you mentioned about the margins, etc., if you look at the latest Bernstein report, which was out, and you'll see the differences in the margin design we operate in and the margin structure of some of our competitors. And that is consequent to the way we have led our investment strategy and technology across the last 3 years.
Okay. So, when we talk about newer products, we are talking about how you're spending on the service side and the product side as well. Ultimately, what investors want to know is what happens with free cash flows and profitability or the break-even point. A Goldman Sachs report says you'll be able to achieve that by 2030. A few of the reasons, of course, is operating leverage. The second would be the battery costs are coming down. Is this a fair assumption by Goldman Sachs? By 2030, you'll be able to do that because that's also far away. Or do you think it'll be before that you will be free cash positive and earnings will be positive as well?
See, no comment on the Goldman Sachs projection. It's their own model, so I would refrain from commenting on that. You see my Q1 numbers, and we have reported segment numbers for both auto and cell, and the Q1 numbers of segment clearly shows the segment is almost at a break-even level. It's -2% EBITDA at a segment level. So our numbers continue to demonstrate the strength of investment we have done in the past on technology and the scale, and that scale operating leverage is kicking in even as we speak.
Okay, so yes, so do you have any target 3 to 4 years down the line, maybe it'll be free cash positive, or will it be more than that? If it's a ballpark idea that I'm trying to understand here.
I mean, honestly, I won't be able to give a comment on future cash flow numbers.
Your internal targets that you have set in place?
We always have very strong internal targets, so I won't really comment on the targets numbers.
Harish, just one more question. Quite a lot of the projections have been made taking into account that there will be some incentive schemes that will continue as far as government is concerned. But in the last couple of months, we do understand that these incentive schemes are tapering out. So will that further delay your path to profitability?
See, we have always built our financial design and business design in a world where incentives may or may not be there. I think the government has done incredible, kind of job in terms of promoting the industry. They have had FAME 1, FAME 2, and now with the upcoming PM E-Drive, I think the government has done incredible investment in this space. And it is incumbent on the industry to actually build on that and deliver, the strong business design. And while the PLIs are there, the FAME is a consumer subsidy. We are entitled for both the PLIs, the auto PLI and the cell PLI. So we are very uniquely positioned that way. But I think the government has done enough from an investment perspective. It's for the business to have its own design to sustain beyond the world of incentives and subsidies. And that's what we always are focused on.
Okay, all right. So we take that point, Mr. Abhichandani. Thank you so much for joining in today with all those details and answering all those questions. That's the word coming in from Ola Electric about the new network service or the expansion that they're looking at in Tier 2, Tier 3 cities, and also about the service issues of some of their products. We'll slip into a short break. Up next, we'll connect with Manas Agrawal, the research analyst at Sanford C. Bernstein. Sources suggest PB Fintech plans to enter the healthcare sector with own hospital chains. We'll understand the impact on the other side. Welcome back. Let's talk about another stock which is on our radar, has been in focus for last 2-3 trading sessions, PB Fintech. The stock is under pressure. Sources are suggesting that PB Fintech plans to enter healthcare sector with own hospital chain. To discuss this and more, we have Manas Agrawal, who's joining in now. He's the research analyst at Sanford C. Bernstein. Manas, good afternoon. Thank you so much for joining in. Well, the company has not really gone and denied this story that has come by. They're saying that they keep exploring options. What, according to you, would be the impact? Do you think this is the right move if they go ahead and actually diversify?
Sure. Thank you for having me first up. Essentially, very little clarity from the company. They've not denied the story that was broken last night. Because we don't have a lot of details, difficult to pencil in how much impact in terms of capital expenditure or revenue. But from a strategy perspective, if you really think what they're trying to achieve, it's good for the customer, it's probably good for the hospital, it's good for the insurer. And end of the day, then Policybazaar should be able to get better commissions on the policies that they sell. But the question is, at what cost is all this going to come up? Is Policybazaar going to become a more capital intensive business model, which is not what people want to hear? And the stock price is reflecting that, down about 15+% over the last 3 days. More clarity on the business plan around this whole piece will, I think, be helpful in terms of what the plan is, what is the timeline, how much money do they intend to allocate. I think all those questions are weighing on the stock at this point in time. The company has not denied it. They've not shared much detail as well. And that's where we are from a fundamental perspective.
Manas, very good points you put forth. Number one, you've said in your note that, investors bought the stock for the high growth, strong business model and cash generation. And you say that the backward integration is a meaningful shift, from the company's capital light business model. Could you give us a scenario analysis? Of course, you don't have the numbers, because it's still not out. But what kind of scenario analysis do you think in terms of what kind of return ratios and how it will be impacted given if the company uses the cash that it has on its book to go ahead and set up these hospitals?
Sure. So return ratios, I think, are a very way off in estimating simply because we don't have enough details. But if I was to paint some scenarios, if Policybazaar was to build hospitals, as your report suggests, that would take a lot of cash. That is a real estate heavy business. And then there is very little right to win in that business. I think what is probably the plan and more likely to be the plan is they partnering with hospitals to tie up inventory for beds. And when customers from the Policybazaar insurance distribution business come in, they get access to that better treatment in that sense. And that will kickstart a better customer experience, leading to better commissions for Policybazaar is the probable plan by the looks of it. If they go down the path of building hospitals, I think that will be more negative. If it is a capital light way of achieving this through partnerships, that will be probably something better. Very difficult to comment on return ratios and how that all flows in. What I can say is a large part of their profit today comes in from interest income on balance sheet cash. If cash gets deployed somewhere, you will see some reduction in that, which will flow into your lower profitability. But I think if investors are convinced that this is the right plan, then people may be willing to look beyond. Because there are no details at this point in time, very difficult for people to understand and comprehend what the upside could be and what the cost of it is.
Manas, I'm going to put you on the spot. Number one, I want a short-term, medium-term and long-term view on the stock in case this particular development fructifies. And we should assume that it does, given the fact that the management has alluded to it both in Q1 and also yesterday hasn't denied it. And do you also feel, would you change your stance if the management does a rethink on this particular foray, given the fact that, the investment community hasn't really liked it?
Sure. Easy question, difficult answer. I would wait for more details to really think about how I think of the plan and what the impact is in terms of EPS or valuations. Essentially, my broad view is if it's capital light, if the communication to investors is good, I think it could work well for the stock. If not, then short term, there'll be pain. Barring this development, like the business model, we'll see how this pans out and await more clarity on this particular piece.
Completely take that on point, Manas. Thank you so much for joining us. We'll wait and watch by what exactly PB FinTech does as far as backward integration is concerned. But with that, we've run out of time on this edition of Mid Cap Radar Mutual Fund Corner when we return.